So guys, good morning, good afternoon, good evening, wherever it's connecting from. Welcome to today's episode of the Market Compass. So in this episode, we're going to be reviewing as much as we can, and let's see what we can potentially expect for the week. Okay, so before we go into that, let's take a look at the red folder news that we'll be expecting. There is no major red folder news to expect today being Monday and also Tuesday. We'll be expecting to see some movements from Wednesday. All right, so I'll be expecting to see what can happen on Wednesday. We have AUD CPI by 1:30. We have CAD by 3:45. We have another CAD again by 4:30 p.m. We have USD by 8 p.m. FOMC, that is on Wednesday. This FOMC is going to upset a lot of tone. I think this is one of the last major red folder news we have for this month. Well, actually, that is it because the month ends on Saturday, right? So let's see what we can get. And then we have CAD and USD related news coming up also. So having said that, let's now go straight into what we have for the chart analysis.
You never sell land. Why you go push this person will go buy? You know.
Sorry about that, guys. Please, once you come in, just kindly mute your mic. So sorry about that. So as I was saying, what we can potentially expect, we're going to begin with the dollar index, right? We'll begin with the dollar index. Let's see what we can get on the dollar index. For the DXY, I will come from a monthly time frame. Let me write this out. Let me see if I can make this a little bit educational as possible. This was part of the things I wanted us to look at yesterday night. And these are the top questions that you should ask yourself. Remember, I said that there are 4 major duties of a trader. And those of you that were with us 2 weeks ago and last week, if you watched the weekly outlook we had 2 weeks ago and the weekly outlook we had last week, you would realize that all the things that are happening so far in the market was something that was called out, and I shared exactly why we should expect those things to be called out, or why we should expect price reaction to deliver such, both fundamentally and technically, right? So looking at this, these are the 4 major duties. So these are the 4 major duties of a trader. And number 1 is to build a bias. So you want to ask yourself, what is bias? What are you expecting, right? So you're majorly building a bias and context. So bias and context. Then number 2 is to identify points of interest. That is POI. Let me just use POI, right? So to make it shorter, you want to identify your points of interest and ranges. Then, so liquidity, points of interest, identify. This is build, bias, context, and liquidity. Then number 3 is to identify what we call the entries. So what will be the entries? Number 4 is risk and psychology. Now, these are the 4 major duties of every trader. Once you have this, once you can identify these very 4 things, you're good to go. Now, under the 4 things, the first and the second, these are the questions that if you can answer correctly, it will give you a very, very good edge in what to do. So now these questions are based on the first and the second duty of a trader. One of the things you want to do whenever conducting analysis, it's all bias, entry, exits, and your risk. All right. So that's number 2. Number 1 and 2, 3 has to do with bias, entry, your exits, and then this. Now, these are the 4 major questions that you want to ask yourself. Or these are some of the questions you want to ask yourself when conducting analysis. So questions to ask when conducting analysis. So this is how you go about conducting analysis. All right. This is exactly one of the things that, you know, he who asks the right questions, we usually know exactly what to find and what to expect in seeking the right answer, and then thus can get the probable or desired result you want. It becomes easier. Once you know, those who ask the right questions usually get the right answers, and they are the ones that usually see the result they still deserve. So it's just what are the right questions you want to ask yourself in the chat. So number one is that you want to ask yourself, right, where is price drawn to on the higher time frame? So where is price drawn to on the higher time frame? Sorry. Where is price drawn to on the higher time frame? The second question you want to ask yourself is, what liquidity is yet to be taken out? So what liquidity is yet to be taken out? All right, then number three. Third question you want to ask yourself is, sorry, just a moment. Where is price coming to? What liquidity is price yet to be taken out? Then the third question you want to ask yourself is, what structure confirms, I will explain this, all right, or invalidates my bias? Then number four question you want to ask yourself is, where is the cleanest H4, that is 4 hours time frame, points of interest in alignment with my bias? The fifth question you want to ask yourself thus is going to be, which liquidity or what liquidity or levels am I trading from? Trading from to. So then me, for my own model, this one is particularly for my own model. All right. What are the quarter point levels saying in all this? So the last question is peculiar and unique to me. It's not necessarily for everybody, right? So, but then no matter the model, no matter the entry system that you trade, this last question is peculiar to me. But no matter the model and the entry system that you trade, the first 5 questions are very much important, right? The top 5 questions are very much important. Once you can ask yourself that, it's going to give you a good ground on how to conduct the analysis. So I will just keep this here and let's begin from the monthly time frame. So DXY, analyzing DXY is exactly the same pattern I'm going to use analyzing this. Let me see, just a moment. Let me see if I'm going to drop this or copy this somewhere else so that we can always have access to it when analyzing other assets. So now, so the first question, right? Like I said, the 4 major duties are building bias. Now we're going to run, having laid this out for you, let's now run. The 4 major duties of a trader is number 1, build bias, context and liquidity, then define points of interest ranges, then your entries, then risk and psychology. So having said that, coming to the dollar index now, I want to ask myself, where exactly is price drawn to? That is my number 1 question when conducting analysis. Where exactly is price drawn to? I want to know where is price headed to. If you watch the video from last week and the video from last 2 weeks, I explained why we should see price capture this lows and some of these lows below. Now, on the 4 hours, on the monthly time frame, even if you look at structure, even if you want to talk structure or discuss structure, you're going to see that this is that lows, lower highs, lower lows for me and lower highs. I don't necessarily like paying attention to, especially in this particular case now. I would rather want to consider lower lows, lower highs, and lower highs. So all these are more like structure within structure. So they are more like the minor structures and not necessarily the major structures. All these climb up to or structural points here, higher highs, higher lows, higher highs, higher lows, are more like the minor structure where we got that information for the major move. This was just only a minor structure. And there is a way that I consider a break of structure that has been very, very much helpful to me. I learned that from the Chris and I learned it from Fox. All right, both the Chris, Fort, and Chaps. These three traders, I learned it from them when I'm studying something about. So I saw a post from them and I was like, okay, let me look into this. And I saw how very much important that study was for me. And it helped me reduce so many noise in the market. So in that particular case, when I'm defining my structure, I know that, okay, this is it. I'm bearish on these guys. Now, question is, where is price drawn to on the higher time frame? Overall, we have this drawn liquidity, whether I like it or yes. I would have said this loose, but as you can see, at the open of the week, that was exactly where we gapped down into this, which was this loose right here. So the next drawn liquidity I can see on the weekly time frame. Now, why on the weekly time frame? Since we are intraday traders, all right, we trade week in, week out, day in, day out, and all I want to do, like I told you guys in the last class, your major duty set as the week begins is to identify a bias. Once you have a bias for the day, you want to stay with that bias. You don't want to change your mind about that bias. All right. Once you have, like last week, we had a bullish in the video I called out for you guys. I also mentioned this, that once you have a bias for that week, stay with that bias. Don't look for counter trends on that bias. If you're looking to buy Euro USD and GBP USD, don't sell Euro USD and GBP. Don't do any sell to buy thing. All your entry models you should be trying to apply should only align to buying Euro USD and GBP USD. That is all you want to do. All right, don't attempt selling Euro USD to buying GBP USD. Once you have a particular straight up bias, stick with that bias. All right, don't do a counter trend related kind of stuff there. So we saw how that played out last week for us. Now, the only thing that will make you change your bias is when you are beginning to answer number 3 question. What structure confirms or invalidates my bias? Such that I am looking to buy, I am looking to sell for this week. I want to stay close on that. I want to stay locked in looking for only sales opportunities and buying opportunities. And if price, anything that makes price break or close above this particular level, it invalidates my bias. That means I will no longer be interested in looking for sales. I will now be interested in looking for buys. Or I will no longer be interested in looking for buys. I will now be interested in looking for sales. These are the major questions. These are the simple questions you want to ask yourself. So on this case now, we can say that we are bearish. Drawn liquidity for us is going to be here. And the week, this weekly candle just opened. If there are any other levels, so now where is price drawn to? Remember, we're building the very first thing, bias and context for liquidity. All right, so where is price drawn to? We know that price is drawn to this lows. We should see it. And I would not go into fundamental analysis, but also fundamentally, we should see price get attracted to this particular lows. And coming to the daily time frame, you also see observe the daily structure and what is going on here. If you want to turn into line chart, all right, you will see that we got previously these higher highs, higher lows, overall higher highs. This was our break, lower lows, lower highs, and ever since then we've been coming down. So daily itself is even bearish. Even if you want to read it by the most recent structure, you have higher highs, higher highs, break of structure, lower lows, lower highs, lower lows, and then we potentially see some more drop to the downside. Now, one of the things I would advise many of you or you guys to do is to spend so much time in the study of the higher time frame analysis. See, study weekly time frame, daily time frame, and 4 hours time frame. Study this time frame very well. Once you can master the story that is being told on this time frame. Remember, I used to tell you guys about time frame price story, where you conduct analysis on the weekly time frame. You best evidence to wait for it on the 4 hours time frame. You conduct on the daily time frame. Best time frame to wait for an evidence is on the 1 hour time frame, and so on and so forth. Now, once you can master the story and every time frame has a story is telling. Once you can master the story that the time frame is telling, it will be good for you. I mean, trading will become much more easier for you to handle. All right, it will become much more easier for you to read and to interpret. So in this case now, on the weekly time frame, since we trade week in, week out, I'm trying to build my bias for the week on the dollar index, which once I build, it will be easier for me to follow on Euro USD, GBP USD, and the rest of the majors, NZD USD, AED USD. All right, so on the dollar index, I'm already bearish now. This is the draw liquidity. Where is price drawn to? What liquidity? The next question now I want to ask, still under all these questions are centered around number 1 and 2, building bias, context, liquidity, identifying ranges and points of interest. Once I have that, I know my entry playbook already. I've shared my playbook with some of you guys already. So I already know what my playbook is telling me to expect. Now, I already know that, okay, based on my entry playbook, this is what I could potentially see. So I'm not talking about entries yet. Whatever entry model that suits you, you can use that. So now I have this. What liquidity is yet to be taken out? All right, so I want to sell, but which liquidity is yet to be taken out even before I consider the sell? That could potentially attract maybe a bullish reaction to start selling. Now, this is a weekly time frame analysis. I would want to go to the 4 hours to define that. So weekly time frame analysis, 4 hours time frame evidence. Weekly time frame analysis, 4 hours time frame evidence. On the dollar index, if there is any drawn liquidity that is going to be much more interesting for me, is going to be this. Can you see that equal highs right there? That is a drawn liquidity I'll be very much interested in to see price come into. I don't know for this particular highs, but I doubt if I would want to see price come into these highs. All right, coming down to the daily time frame, even considering the daily time frame structure, you can see how it is. Now, having identified the liquidity that is yet to be taken out, what structure confirms or invalidates my bias? This is it. Anything that will make price close above this, I feel that anything that should make price buy and close above these levels is going to invalidate my bias. I wouldn't even be looking for sales anymore, because coming down to the weekly time frame, that is a very big. I'm not saying that such retracement is not possible, but I know that with the way the dollar is going, both fundamentally and technically, anything that should bring this weekly time frame to close all the way above here is going to also strengthen these highs. That is just one shot fact. It's going to also strengthen that highs. Anything that brings this weekly candle up to that daily levels that we marked out is going to strengthen that highs. So as long as we stay below these daily structural levels, this one here, and I'm not considering it as internal liquidity, all right, but as long as we stay below these daily levels, that means we should still see more sales. Now, coming to the 4 hours time frame, any drawn liquidity that I can see here would just only mean this drawn liquidity. But are there chances that we will most likely not get there? Yes, because no, as we identified that now, the fact that we identified this liquidity where it is the one that is yet to be taken out does not now mean that price will compulsorily come up there. No, there are chances that, after all, when I was defining it for last week, I was anticipating there was a liquidity above. I think it was this liquidity here, or this particular liquidity, that I was anticipating for price to capture before selling. Price did not capture it. So the fact that, yes, we identified this does not now mean you should be buying and selling. All I would prefer to wait out for now is a 4 hours evidence. All right, so even if we get a retracement, I just want to see a 4 hours shift structure and confirm my bias to now sell. That is it. Like, as you can see, the Friday sales here was clean. This was a 4 hours clean break that led to this sale. So even if you had entered here SL here, you know that we have a long ride all the way to the downside. So in this case, what will you do now? On the daily time frame, on the 4 hours time frame, we're now trying to identify where is the cleanest 4 hours points of interest in alignment with my bias. Those of you who trade based off on imbalances, you know that, okay, fine, there are imbalances here that we can pay close attention to. There are also more imbalances here that we can pay close attention to. Aside that imbalance, another thing again that I used to confirm my clean points of interest is I trade support and resistance. So I can put this in alignment now with my quarter point support and resistance levels, which, if you see here, based on my quarter point support and resistance levels, I would be very much interested in these levels. So please permit me not to start talking about what those what quarter point support and resistance levels are. We handled that in our last bootcamp. I think in a session I explained how I use these levels. So you can see that the most probable levels, and if you watch last week's video too, I don't even know why I deleted this, but if you watch last week's video on the analysis, market compass for the week, you remember that I mentioned these levels. I said that we are at the very, very key structural levels where we can potentially begin to expect retracements from. And what we can now expect is maybe highest, they will just sweep this liquidity to start selling, which price did not sweep, but they moved from that level. In this case now, we might not get that deep retracement, but I am pretty much interested in these levels for a potential sell continuation. That is where I'll be keeping an eye for any point of interest. All right, so back to this chart, you'll now realize that level is somewhere around here. That level is plotted based on the quarter point support and resistance is somewhere around here. So I'm paying close attention to this. Now, these levels was drawn on the 4 hours time frame. When price come into these levels, I can easily wait on the 15 minutes time frame for evidence for me to sell. If not that, I can wait on the 1 hour time frame for that evidence to now begin to sell. All right, so I've identified what my clean 4 hours time frame alignment, 4 points of interest is in alignment with my bias. The next thing now is what liquidity or levels am I trading from and to. So that means I've also identified based on my quarter point levels that in this case now, I'm more interested in the levels and not liquidity. So it is more of what levels am I trading from and what levels am I trading to. So these are the levels I'm trading from and the easy targets I'm trading for. So levels, liquidity, they work all hand in hand for me. So I'm looking to trade from anywhere around these levels to this liquidity this week. So any entry I'll be looking for is within this zone. So if price can retrace all the way up here, if they give me the clean 1 hour shift or preferably a 4 hour shift in structure around this level, that is my trade. If they don't give me this around this level, I will wait for them after the sweep of these highs. If after the sweep of these highs, they don't give me, I can accept maybe a candle wick above this, but the body should respect this. If they don't do that and we get a body close above these levels, I will not have a reason to be looking for sales again. All right, or I will now be shifting my bias to complete buying bias. So in that particular case, that is why I would always say don't try or don't attempt a buy to sell case. Always wait. You've already built that weekly bias. So now, what is my bias and context for the week? I'm bearish for DXY, which in turn means that I'm bullish for Euro USD. All right, for the week. So having said that, I want to only look for buys on GBP USD, Euro USD. As simple as that. Now, if you look at last week gave plenty buy opportunities. That if you were taking only buys, you would have been hitting back-to-back wins more than trying to attempt sales in those price action. All right, so these are the things I'll be expecting. Coming to GBP USD now, this was GBP USD last week. I remember I had a session with one of us in the academy, and I was sharing with her that, look, pay attention to these levels after the GBP. Even if you watch the video, I remember giving you guys these levels that price is reacting from. I also remember mentioning the sweep of this liquidity potentially, but price should respect this low. This was our invalidation point, that anything that bring price below this as a candlestick body or anything related to that we should, this is short, I will no longer be looking for buys again, I will not be looking for sales. And you can see how that levels was respected. So if you cannot spot out invalidation levels, it's going to be an issue to you. I know that this is going to take consistency in more classes, teaching you guys more about liquidity, teaching you guys about points of interest, teaching you guys about invalidation levels. My method of analysis has not necessarily changed much. It's still the same thing. It's just a little improvement in my playbook on what I expect to see. So if you are taking this trade, entry right here, invalidation level is just this levels here, all right? You realize that I want to buy all through the week. That is it. A clean 1 to 4 weeks reward, as simple as that. Even if you had missed out on that, there were many buying opportunities that presented itself based on whether it's our DRC model and the rest of that. There was one of us in the academy that caught a trade. Let me see if I can find that trade again. There was one of us in the academy that caught a trade last week. So she shared it with me, and this was a trade. So it's a clean buy trade based on the DRC model, an easy 1 to 2 weeks reward. So this was a trade. Yeah, this was a trade for the week. So she was, we after that analysis, I told her just be looking for only buys on G, no matter, as long as it is buys, find out if those invalidation levels, play only your buys and you'll be good to go. This was her buys, that was the entry, and this was the TP. So she got TP hits. It was just a 1 to 2 weeks reward. She was busy last week, so I guess, and this was the only trade she took for the whole of last week. Easy 1 to 2 weeks reward. That is one of the simplest trades. I, for myself, I took a trade also. I even shared it on my Twitter page on GBP USD. Let me look for that trade. Good. This was it. Where is it? Yeah, this was the trade. So this was my own trade for GBP USD. This was my own trade for GBP USD. So that was my before. I was looking to buy all the way to those levels. You can see my DRC levels around there. But I didn't hold on to that level. I didn't. I took my CP and entry, easy target 1 to 3 weeks reward. I think so. Yes, 1 to 4 weeks reward. It was an easy win for me. I don't know how I didn't share this to yeah, that was the win. That was the before, and then this was the after. The execution, I think I posted it on my X page. So this should still load. I posted the execution on my X page. I don't know if I'll be able to find it now. Where is my profile there? So I posted it on my X page. Just a moment. So it's one of the trades I took last week. Yeah, this is it. GBP USD in and out. I gave credits to the people that I learned the entry model from, which is Fort and Charts. So that was it. That's 1 to 3, 1 to 4 is reward in and out, and that was my execution. So you can see it in and out. And this was one of the major trades I took last week. I didn't take many, which then the next one was, I think, USD JPY. So that is just its friends. Once you build a bias, stay with the bias. Don't trade counter bias. Just allow the market to continue. So in this particular case now, what will I be expecting for the GBP USD buys, Euro USD buys, USD JPY? I'm still bearish on USD JPY, heavily bearish on USD JPY. I'm heavily bearish on GBP JPY. Now Nasdaq and US 30. I'm heavily bullish on Nasdaq and US 30. Heavily bullish on Nasdaq and US 30. I said that in this call, I'm going to call out these buys for you guys, but I guess it's moving already. So I wanted to call out these buys right from these levels. Entries is just going to be right at this invalidation zone, or preferably here. And let's see if we can get this 1 to 4x reward. But I think price is already moving. So if you want to jump right into this, you can look for a re-entry on US 30. But I should see US 30 buy from where it is. You see these levels. I want to see US 30 buy from these levels where it is all the way to this target. So exactly the same thing that I did here was exactly the same thing I did on US 30. And maybe let's run through US 30 and we'll call it a day. All right. So let's run through US 30 and we'll call it a day. I might not have all the time to do for all the assets. So let's look at US 30 and then we'll call it a day. So weekly time frame, I told you guys the question is where is the drawn liquidity on the weekly time frame. It's easy for us. All right. Looking at even how the structure is, we know that drawn liquidity for us is going to be these highs. We want to see price come all the way to this high. That is exactly what we are expecting for price action in US 30. Last week, I was also expecting these highs. The next question is what liquidity is yet to be taken out? While I was looking to take these highs, I knew that my drawn liquidity is this. I wanted to see price action, at least take these lows, previous weekly lows, before we start attempting the buys here. And aside that, there were some more liquidities within this range. Now, I once thought you guys, I think I will need to host a separate class on that. Let's meet by tomorrow London session. I have a meeting tonight. I would have said let's meet by 9 p.m. tonight. So maybe by tomorrow London session, I will teach you guys about defining ranges, and you can define ranges and liquidity on the weekly time frame. Playing the game of ranges and liquidity on the weekly time frame. Once you can interpret the weekly time frame, like I told you guys, spend more time on the weekly, daily, and 4 hours time frame, and it's going to change the game for you. So I've studied so much on the weekly time frame to see how price interact on the weekly time frame, and I cannot wait to share what I've realized so far. I've shared it with a few of us in the academy, in some personal studies, and it has been a game changer for them also. So I knew in the weekly time frame, there's a way I identify my protected ranges and my open ranges. So I knew that any range I will be looking to take my buys from is going to be from these lows to these highs. Now, this was that liquidity that I was interested in on the 4 hours time frame for the last week. So immediately we came, I had these buyers. I just knew that point of interest for us, this is it. I just knew that was the point of interest for us. And you can see how price came right into that. We got Monday, Tuesday, Wednesday sales, and then from Wednesdays, we got the buys all the way to the upside. Now we've opened a new week. The question now is, where is drawn liquidity? We've identified drawn liquidity. The next question is, which liquidity is yet to be taken out? Let's see on the 4 hours time frame, weekly time frame analysis, 4 hours time frame evidence. So on the 4 hours time frame, ideally, I would have been much more interested in this liquidity, which is this lows right before or right below this. But another liquidity I was also interested in is the liquidity that was resting above here. But then that is not a liquidity at the distance. So I think I would prefer this liquidity. And let me see the daily time frame. Let me see the daily time. I would prefer to see price capture this liquidity. So maybe let's disregard this. This was from last week, all right? This was last week liquidity. So I would really want to see price capture this liquidity before we start resuming that buying opportunities. Then after that, the next question you want to ask yourself is, what structure confirms or invalidates your bias? The structure that is going to confirm and invalidate my bias is still this one. All right, you see these lows here? That is it. This lows is not it. Why is this lows not it? Because on the weekly time frame, if you come to the weekly time frame, or even on the daily time frame, you will realize that there are chances that this weekly time frame can just stick on to just previous week to now continue its own bullish movement. So the range is not defined from this. We're not defining this as our range yet. The only time we can define this low as a protected low is when this highs has been taken out. So once that highs is taken out already, that is when I can say that, okay, my range is now this low. So what we still hold on to this bias, because many persons can make the mistake of price sold all the way to these lows, and therefore you're no longer bullish, you're not bearish. No, you can still potentially get bullish opportunities even after the clear of these lows. The protected low for us is here. So this is the structure that confirms and invalidates my bias, not this particular one. If these guys had closed above here, then this would be that protected lows. As it stands, that is not the protected low for me. So while that is not the protected low, I'm going to be keeping an open mind on this level. Nonetheless, I would want to still play within this range. Highest, even if I take a loss on these guys here and they come here, I know that the next trade will be a grand win and I'm going to recover all that has been lost. All right, so having said that, that is the liquidity that is yet to be taken out. And what 4 hours point of interest now confirms my bias? This is it. I'll be looking at the entire of this 4 hours point of interest. If not this 4 hours point of interest, this was the one I was interested in actually. The entire of this sell push. This was the one I was interested in. The entire of this sell push that captured this liquidity before this reversal. Not necessarily this one, the entire of the sell push, of which we've tapped already into. But in someone that we tapped into this, we've not gotten that close yet. So let's see. We'll watch how this levels. As you can see this imbalance. Let's see what price will give us. If price moves all the way from here without giving us an entry, no problem. Then the next question is what liquidity or levels am I trading from and trading to? If I look at the quarter point levels here for me, you see this now. This is beautiful. We are already reacting from a major quarter point area of support and resistance. That was exactly where price came in from. I doubt if they will want to come back again to these lows. I personally doubt if they want to come back again to these lows. I feel we'll just react from anywhere. You can see now they are close to major quarter point levels, which is a 1,000 pips range quarter point levels. So I am anticipating or speculating that we should see a reaction from here all the way to the upside. All right, so in alignment with the quarter point levels, this is exactly what my quarter point is calling out, that we should see the reaction from these levels here, from these zones right here, just as we saw here, or any of these other places, right from this zone for a bullish continuation. So we might not see these cells, and having seen that they're also rejecting from here, I don't know if we'll see these cells all the way from here. So just keep an eye. That's why I was saying left for me, I would have taken an entry. Let me see the 15 minutes time frame. All right. So I would have taken an entry left for me anywhere around these levels, playing support and resistance. If you want to play support and resistance now, anywhere around these levels is going to make sense for me to consider. And SL is just going to be here. Anything that brings them back to these levels, no problem. We'll look for that entry, but then this is it. So if you're in on this call, this is already a 1 to 2 and a 1 to 3. So I'm calling out on these guys for you. I'm calling out on these for you guys. So keep an eye on display. Just keep an eye on display. If you want to take it, this is a trade opportunity I'm calling out for the family and for the community. All right, so that will be it. So having said that, see you guys again by tomorrow during the London session. Don't worry, with consistency, we see with our meeting consistently, you're going to get to understand how I do this on a year-to-day basis. It's not confusing, it's straightforward. I have a checklist I follow. And today I just wanted to use this, introduce you guys to these major questions that you should ask yourself when conducting analysis, and it will make things easier for you. All right. So thank you for staying true. See you guys again tomorrow. Trade safe, clap easy, don't blow your account. This is the only trade I'll be looking out for today, US 30. Limit SL, entry limit SL, and that will be my TP. So having said that, cheers to a fruitful week ahead. Shalom, shalom. Bye, guys.